Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar holds steady above the 60-day simple moving average, having broken above there, and along with that, surprisingly holds firm after the RBA cut rates earlier this week from 3.85 to 3.60. A 25 base point cut may put further indication that the market might be looking for another one in the coming weeks when the RBA meets again. Along with that, the dollar index slipped to 97.65 after the July CPI printed a 2.7% year on year, just under the forecast of its 3.1% above expectations, keeping pressure on the Fed to cut rates in September. Attention now turns to Thursday's job report, and also further labour market weakness could see damper cuts priced in. And keep an eye on the US PPI and the jobless claims. And then Friday brings Michigan's sentiment and more Fed speakers as well. So no doubt there'll be a lot of talk about a rate cut in the coming weeks. With the upside target still remaining around 66 cents for the Australian dollar, any pullback likely to be temporary. Turning to the euro, still marching higher and still with the expectations of reaching 118. I feel that the break of 117.20 would give us the move to the upside, but let's keep an eye on these technicals, as a weaker play would actually see a pullback to around 116.30, but opportunity may be seen as demand may return. A very heavy play in dollar yen as the market now looks closer to its objective seen at 145 into the third consecutive day to a bear case. Any upside likely to be limited. Sterling also showing its demand as it rallies since 131.5 and still very much on track to reach its highs that was seen back in June of 137. Weakness likely to be temporary. Turning to gold, what the market holds for the third consecutive day as it edges higher, and I still believe we can go back to that rejection area of 3,400 and still seeing the support area around 3,340. Wrapping up with oil, the market has rebounded just in front of that level around $61.5 to $62 a barrel. Overall, there is bullish divergence here, so no doubt I'm expecting to see a rally now to $65 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.